This Bitcoin treasury strategy for corporates is spreading. Here it is in Latin America now. I'm sure this won't be the last Latin American firm that hops on the bandwagon. Basically, every kind of jurisdiction will have its own version of the company formerly known as MicroStrategy. And it makes sense that every jurisdiction will have this because they'll have local access to this. Japan has its metaplanet, and it's done amazing.
Yeah,
I think we've covered a couple of European ones as well. Yeah, Hong Kong. Here you are in Latin America.
Well, welcome back to Japan. Appreciate you getting on the pod this morning. I know it's a bit jet lag, but let's get this done. Welcome back to Bitcoin.com's The Weekly, which is the world's #1 recap and digest of the biggest stories in the Bitcoin and cryptoverse. I'm Graham Stone, and I'm joined by David Sensel. And this week, we've got a powerhouse lineup. Strategy, the company formerly known as MicroStrategy, is doubling down on Bitcoin with a record $21 billion stock raise. A bold Latin American contender named Oranje is trying to out-Sailor. El Salvador is defying the IMF with daily Bitcoin buys. BlackRock is warning that the bigger risk now might be to not own Bitcoin. And we also have a tech story. AI-driven blockchain explorers like Arkham and Block Chair are changing the game on how we track on-chain activity. So we've got a week packed with massive capital flows, geopolitical standoffs, institutional FOMO, and cutting-edge transparency tools, all reshaping the future of the crypto markets. And before we dive into it all, make sure you follow us, hit like, and drop your thoughts in the comments. And don't forget to sign up for David's weekly newsletter at Bitcoin.com. It's your 5-minute end-of-week digest loaded with links, charts, and deep dives on everything we cover here, plus bonus insights to take you further down the crypto rabbit hole.
To start with, as you said, Graham, Strategy announced a massive $21 billion at the market stock offering to buy more Bitcoin. This is despite a $4.2 billion Q1 net loss. The net loss was mainly from a $5.9 billion unrealized hit on its Bitcoin under new fair value accounting rules. However, the company insists it's making progress. It now holds 553,555 Bitcoin and is setting aggressive Bitcoin yield targets of 25% for 2025. The CEO, Phong Le, says Strategy is leading the corporate Bitcoin treasury wave with over 70 public companies now following the model. And
Can
CFO
I just jump in for a sec, David? The BTC yield target, it's always been a bit confusing to me. So they've got a BTC yield target of 25% for 2025. Now, correct me if I'm wrong, but my understanding is that when they say Bitcoin yield, they're not actually talking about earning yield from Bitcoin. Rather, they're talking about using their stock sales and debt to buy more Bitcoin, which is pumping up their balance sheet. They're not generating organic returns. And when they do that, when they add more Bitcoin to their balance sheet, each share effectively gives investors exposure to more BTC per share. So I guess that's how they're coming up with this term Bitcoin yield. Is that your understanding of how this works?
Basically, yeah, that's how I understand it. It's not yield as we would usually call it.
Not in the crypto world, like staking yield or
yeah. I'm not sure if they even call it, if this is how they call yield in TradFi. I'd have to research on that. It's a term of art that I haven't heard applied like this before. So,
yeah, I consider these Bitcoin corporate treasuries' use of Bitcoin yield as a metric to be kind of a marketing spin, actually.
Yeah, exactly. Yeah. Last point, CFO Andrew Kang pointed out that even though the Q1 closed with unrealized losses, the fair value accounting change actually boosted the retained earnings by $12.7 billion. And so, yeah, they are buying more Bitcoin, and they see themselves at the forefront of this kind of corporate treasury strategy. That is the basic story.
Yeah, and so with this new $21 billion at the market stock offering, right? To buy, basically they're raising $21 billion to buy more Bitcoin. I guess, the implication here is that it's just putting more pressure on other Bitcoin corporate treasury companies to up their game, I guess.
Yeah. It's also, I wonder, I mean, do you have any reservations whether they're going to be able to raise the 21 billion?
Well, yeah, certainly that's an interesting question, right? Their past money raising attempts were sold out instantly. Like they were able to raise the money easily. So this, if they're not in this case, that will be a pretty strong signal, I think. If they're not able to raise the money.
Also, like we've talked about before, this strategy, it produces less yield, less of the yield that they're talking about as the pot of Bitcoin grows bigger and bigger, right? It's harder and harder to get a higher gain on
Yeah.
your Bitcoin per share or whatever. So if you're an investor, I mean, you could look at it two ways. You could say, oh, well, strategy's maybe the safest one to do, although that's debatable now as they keep selling more equity for this. But also you have to think, but your potential return on investment is lower than some of these other companies who have a smaller amount of Bitcoin to start with, you know?
Yeah,
so,
exactly. On that note, I mean, we've just got the launch here of another strategy competitor. This time it's Oranje, which is a new Latin American Bitcoin treasury company. And it's advised by Itaú BBA, which is the investment arm of Latin America's biggest bank. And it's preparing to deploy over $200 million into Bitcoin. So the company is positioning itself as the first pure Bitcoin balance sheet player in the region. It's trying to capitalize on institutional Bitcoin adoption, still being at just 3%. And Oranje plans to issue debt, just like Strategy, to fund BTC purchases, offering institutional investors a potentially more tax-efficient option compared to local Bitcoin ETFs. And the company, I think this goes to what the point you're just making, David. The company claims it can generate a 45% Bitcoin yield in its first year. So that higher yield or higher amount of the Bitcoin balance sheet growing per share, I think that may be possible because of the smaller base effect. They just hold less Bitcoin.
Yeah. And so, yeah, now, as we've discussed over many weeks, this Bitcoin treasury strategy for corporates is spreading. Here it is in Latin America now. I'm sure this won't be the last Latin American firm that hops on the bandwagon. Like I think you said this last week. You were like, basically every kind of jurisdiction will have its own version of the company formerly known as MicroStrategy. And it kind of makes sense that every jurisdiction will have this because they'll have local access to this.
Every large pocket of capital markets, I guess.
Yeah, right.
Is going to want this.
Japan has its Metaplanet, and it's done amazing.
Yeah,
I think we've covered a couple of European ones as well. Yeah, Hong Kong. Here you are in Latin America. And so,
sticking to Latin America, let's move on to a little El Salvador action.
Yeah, El Salvador is going to keep buying daily amounts of Bitcoin, even though it's under pressure from the IMF to rein in crypto-related activities as part of its loan conditions. The economy minister, Maria Luisa Hearn, confirmed at the Web Summit in Rio that President Bukele remains committed to steadily accumulating Bitcoin. Right now, the government holds around 6,162 Bitcoin, worth over 583 million, and has been quietly adding roughly 1 Bitcoin per day, according to Arkham and Intelligence. This to me is an interesting story that you and I have kind of speculated on many times before.
Yeah, I love this story.
What do you make of this, man?
Well, I just love it that they're just like, no, we're not going to comply with the IMF's rules, with your rules here. We're just going to keep buying the Bitcoin. And so far, we haven't seen, I at least haven't seen any statements from the IMF or any like, hey, no, we're going to claw back that line of credit that we've offered you. Although that is, of course, the risk here. I mean, what happens if the IMF says, no, we're not going to give you the line of credit, and then El Salvador starts to get into some economic trouble? And what do they do then? Do they have to sell their Bitcoin in order to like fund their government?
Yeah, I I also think it's not clear exactly what the IMF has control over. As in, they say that they need to stop doing this, but how far exactly do their loan conditions extend into what El Salvador spends its money on? Right? Is it
Yeah,
simply
well,
just
it was stated. I saw a document where it was stated in the loan conditions that you shouldn't be using this money or government money to purchase Bitcoin. Okay. Now
so?
they're doing it.
Do you think they are using this money? Are they
No, no.
explicitly
Oh,
using the
okay.
loan
Sorry.
money?
No, no. I don't think they're explicitly using the loan money, but does it really matter? Because it all kind of blends together anyway. Like if you've got a certain budget and then now you've got a line of credit, so your line of credit, okay, you're spending on it on a road, but you would have spent from that money to build the road from your like normal tax receipts. Instead, you're just like using some of your tax receipts to buy the Bitcoin, and
Right.
the IMF is paying for the road. So it's
And I agree with you, but does the IMF have the legal authority? I mean, they obviously don't because we're talking about national level here. Do they? But
well,
you know,
they can just
do they
they can
have the?
just cut off the loan. They can say no more soup for you, but they're
It's a
not,
it's a da-
which is
but
telling.
it's a dangerous precedent though, where the IMF gives a loan and they say don't spend. I guess don't spend the loan money on things that we don't want, and they don't spend the loan money, but then as you're saying, they are able to basically finagle. They use the loan money to do things that they would use their own money that they are now using to buy Bitcoin on other things. I think though that it's very murky, and I think that's the case here, and true of all IMF loans, I imagine, like this, right?
Yeah, the IMF. It seems like this is an organization that used to have a lot more power to dictate how the policies in the country it lends to, and it seems that now they're kind of just like, well, we need to make some loans here, so we we're gonna be a little less picky about how we enforce it. So
There's a Bitcoin.com news writer in the chat, Linzers, Sergio. He's our Latin expert, and he says they agreed to, quote, confine Bitcoin purchases. Experts believe that El Salvador is just juggling already bought Bitcoin, but
yeah,
nobody really knows. So thanks for that, man. And
yeah.
shout out to you. You're doing the work.
All right, let's move on. This was a bullish one at the Token 2049 conference that David just came back from. We had BlackRock's head of digital assets, Robbie Mitchnick, laying out a sharp argument, which is that Bitcoin is evolving from a speculative gamble into a strategic necessity for institutional investors. He stressed that the key factor is Bitcoin's correlation behavior. So if Bitcoin stops moving like a risk-on tech stock, and shows low or even negative correlation during severe market downturns, so-called left tail events, it could become a powerful hedging tool. And this would flip the institutional conversation from the question that they always ask, is Bitcoin too risky, to a new question, which is, are we risking too much by not owning Bitcoin? And BlackRock's CEO, Larry Fink, has become one of the loudest voices on this front, transforming from a crypto skeptic into a digital gold bull. And BlackRock, of course, oversees the iShares Bitcoin Trust, IBIT, which is now the fastest growing ETF ever. And Fink has even floated the idea that Bitcoin could hit $700,000 per Bitcoin if sovereign wealth funds make even modest allocations.
I would just want to start by saying that I can't help but still be slightly skeptical of traditional financial people embracing Bitcoin. And so I'm cautiously optimistic about their statements, but I'm still cautious about it, right? Now, again, even if you're cautiously optimistic about what they're saying, it still shows a huge shift in how kind of traditional finance, Wall Street looks at Bitcoin and, perhaps how they allocate to Bitcoin. But I still think, like, he's talking his book, right? He has this ETF. He wants it to go up. That's a good thing. But I would still personally take what they say with a a huge grain of salt. I don't know how you feel about that.
And absolutely. And I mean, not only that, if the entire thesis that he's laid out here hinges on whether Bitcoin can actually deliver on that promise of non-correlation, which so far has been pretty shaky at best, that non-correlation from tech assets.
Even gold itself during big sell-off events can be correlated, right? That's kind of the scariest moments is when correlation goes to 1 across all assets, and that includes gold. Now, again, gold usually bounces back harder, and over the long term, gold is basically uncorrelated, kind of with the market. Although, if you look at gold and the S&P over time, they both have gone up, kind of together, and gold has gone up more now at this point with the recent sell-off. But what exactly does this correlation thing mean when the S&P and gold have both been going up over the past 50 years or something like that? I don't know. It's even that might be just a meme.
Let's do our last story for this week.
All right. So blockchain explorers like Arkham Intelligence and Block Chair are evolving fast by integrating AI tools that make complex on-chain data instantly understandable to non-experts. Arkham uses AI to analyze and trace transactions across major chains like Bitcoin, Ethereum, BNB, Tron, Avalanche, etc., connecting wallet addresses to real-world entities and simplifying multi-hop transaction flows. BlockChair, on the other hand, offers a conversational AI assistant called Kuborg, interesting name, that answers plain language questions about specific transactions. For example, explaining when a long dormant Bitcoin address suddenly moved nearly 96 Bitcoin after 8 years. Together, these AI-enhanced explorers remove the need for forensic-level blockchain knowledge, offering near-instant insights across networks.
Yeah. So I decided to include this story in this week's show because I've played around with these blockchain explorers quite a bit over the years. And I got to say, every time I do, I'm pretty confused by what is actually presented to me. So I saw this story and I played around with some of these tools this morning, and it gave me the answer that I always wanted, right? I put in a transaction and I'm like, what is this? What's going on with this transaction? It's like, okay, this amount of Bitcoin was moved from here. That's probably an exchange wallet. And this amount was moved to this address, which is probably a privately held wallet. And, it gave you the information in as these LLMs do, in a chat format that's easy to understand. So I thought it was really cool.
Yeah, these kinds of tools are awesome. They're somewhat related to the supposedly oncoming wave of AI agents who are also doing these kinds of things, right? Like I've listened to some podcasts about AI agents who incorporate some of this kind of stuff as well, and you can ask in plain English for information, and they'll just tell you like this kind of stuff. I haven't played around with these in particular, but what I've been told and I believe is that basically these kinds of tools are necessary to make crypto accessible to the mainstream, because as you said, here we've been in the space for however many years, and here we are, talking about the news, and we still struggle with this kind of just dense, unhuman language, transaction IDs and addresses that are just numbers or hexadecimal numbers. And so, this kind of thing is absolutely necessary to get normal people involved. And I love it.
I think there's just one thing to mention here on the flip side, which is that perhaps as more people realize just how transparent the blockchain actually is through the use of these tools, it will become apparent that, just how transparent it is. So that may actually push people to embrace some of these newer generation privacy tools, which probably that's an important move.
Yeah. I talked in my first interview with someone from Zano. This actually came up. And he mentioned explicitly this. He said that like 10 years ago, 5, even 6 or 7 years ago, Bitcoin was the following transactions was hard enough on Bitcoin that it was semi-private, right? Because it was just really difficult to understand the UTXO flows and find it. And so now, and he said this, he was like, now with AI tools, even a couple years ago, it's pretty trivial to track Bitcoin transactions. And then, as you say, this AI stuff will make it easy for anyone to see who's transacting, where they're transacting, kind of what they're buying as well. Right? He gave an example, or no. I had another interview, and they gave an example of buying coffee. Right? They used Bitcoin to buy coffee, and he didn't even buy the coffee. It was the person he was with who bought coffee, and that coffee shop obviously is doxed, and it has a real world location. And if anyone had been looking on chain at that moment, they would have been able to pinpoint where these two people were, and the fact that they were buying coffee in New York at this particular time, right? And that's worrying, right? You don't want that.
Yeah, especially I don't know. As we talked about, I think before the show, there was a new $5 wrench attack, a pretty brutal one in Paris. There's been multiple now in France of known crypto wealthy people having their families targeted and kidnapped, and in both cases, fingers were severed.
Oof.
In order to try to extract the money. So privacy, it's not just about, I don't know, tax evasion. It's just it's something that you need to have.
Absolutely. Absolutely. Yeah. I think, how you have like accounts on X that like whale watchers and stuff like that kind of shout out major movements in transactions. I think you'll have accounts that will track like KOLs or other or pseudonymous accounts that will be AI agent based that will start to track their movements too, which will be scary, right? Like, so I was talking with Shibtoshi
at this conference, right?
Yeah.
These are his holdings.
Or not even that. Like, so Shibtoshi, shout out to Shibtoshi, who I was talking with, who is a pseudonymous account. He's the one who was telling me about this coffee incident. Imagine if there was an AI agent who said like, oh, a crypto account that's associated with Shibtoshi just bought coffee at this store in Manhattan 5 minutes ago, right? Like that, Yeah. That kind of thing probably is coming, and would be quite scary. So you want privacy, and you want to be able to have at least anonymous wallets and stuff like that, so that people can't track your spending and know how much crypto you have.
Yep. Crypto can be like digital cash, but more like cash actually, in that the transaction can happen just between the two people, and that's something that we've had for thousands of years. Probably not a great the complete digital panopticon of authorities and everyone just knowing exactly every transaction. I don't think that's the future we want to live in.
No. And how scary would it be if you, I'm just thinking out loud, but let's say you are worth personally a lot of, I don't know, Bitcoin, and you fly into a country, let's say a not particularly reputable country, and the country itself detains you. It's like, hey, we know you have a lot of crypto. We want some.
Yeah.
Good Lord.
Exactly.
I think that probably will happen at some point.
All right. That is it for this week's edition of Bitcoin.com's The Weekly. Thank you for tuning in. And as always, we'll see you next time with the sharpest, fastest, and most no-nonsense rundown of what's shaking up the Bitcoin and crypto world. Stay sharp, stay curious.
Hodl.